Markets are roaring higher today. This is something I warned could happen following Nvidia's good earnings, but kind of not as good as expected earnings. Anyways, markets are doing well today. Big tech is doing well, small caps, mid caps, Tesla, basically everything is doing well today, besides Nvidia. And this is actually showing a much healthier bull market, in my opinion. Nvidia does not hold all of the investor sentiment anymore. Now, it's also worth mentioning that we had some really good economic data today, and that definitely had a role to play in equities. So here in this video, we're going to go over all of that. What's happening in markets, the data today, as well as your Tesla stock breaking news. And let's start with a little bit of Tesla stock news, and then we'll circle back to cover Tesla more exclusively. First up, this article from Barron says Tesla is the Apple askew. Analyst says what it means for the stock. Tesla can be the Apple of energy, says broker William Blair. That makes the stock a buy. Thursday, William Blair analyst Jed Dorsheimer launched coverage of Tesla stock with a buy rating and no price target. A buy rating at Blair essentially means the broker expects the stock to outperform the market. Tesla makes battery packs for homes and utilities as well as producing solar roofs. The growth in renewable power generation and electricity demand from artificial intelligence data centers are tailwinds for that business. Tesla's energy storage and generation segment accounted for about 12% of second quarter sales, growing 100% year over year. Automotive sales fell 7% year over year in the second quarter. Analyst goes on to mention that Li Auto and BYD that fell 16.1% and 2.9% respectively following their quarterly results in the last couple of days has had a negative impact on Tesla stock in the short term. So this was definitely seen as some good news today following a lot of investors and analysts that have grown on the cautious side lately on Tesla. Now here on the day today, you can see Tesla stock is up about 2.3%. Other big tech stocks like Apple soaring up 2.5%, Meta's up 1.5%, Amazon's up 1.65%, Google's up 1.3%, Microsoft up 2.24%, but Nvidia is down 3.5% today. The headline SPY is up 0.7%. You can see the equal weight S&P is up almost the same amount to 0.63%. As well as that, the Russell 2000 is also up 0.84% today. So as I mentioned in the intro of this video, there's really two main reasons why markets are doing well today. Number one, Nvidia had good earnings, but Nvidia was priced for better. This earnings report from Nvidia was good. I mean, they raised guidance, they beat all of the estimates. The margin guidance for next quarter does signify potentially margins are going to fall, and that could start a streak, if you will, of margins getting worse. That's not exactly what Wall Street likes. And then you only seen a guidance raise of about $600 million compared to other guidance raises of $2 billion or more. So it was really good. They raised estimates higher than Wall Street was expecting, but it wasn't as good as what we were used to seeing. But I think Wall Street is rejoicing in the sense that AI is still here, that Nvidia did, after all, have good earnings. Now, again, the other aspect of this market with regards to Nvidia is such a large company at this point, they just drain the markets of liquidity when Nvidia does well. So now Nvidia is selling off, losing $100 billion or so in market cap value today. That money is getting redirected into other areas of our markets. Also, of very significant importance today, the GDP growth rate quarter over quarter, the second estimate for Q2, came in higher than expected. We were expecting 2.8%. It came in at 3%. So if you're in the recession camp, I mean, this was a blow to your ego today, because you were expecting the GDP growth rate for last quarter to be revised lower. Now, if you believe these numbers or not, that's a totally different conversation. Wall Street, they believe the numbers. and upwards revision to GDP is definitely seen as positive. Now, it's not just that. You also had initial jobless claims that came in lower than expected at 231,000. We were expecting 232,000. So the labor market in real time is, according to this data, not rolling over. It is, stabilizing, if you will. And then continuing jobless claims also came in lower than expected by about 2,000, and last week was revised lower from 1.86 million to 1.85 million. So just across the board, better than expected economic data today. Besides your homes data, so 10 o'clock in the morning today, you had pending home sales month over month. We were expecting a positive 0.4% number. It came in at negative 5.5%. Like, the real estate market is really stuck in the mud right now. It's just not moving. It's in quicksand. Pending home sales year over year came in at negative 8.5%. The forecast was negative 1%. So that data was definitely not as encouraging, but to the extent of home sales being important to the economy, I think it's important to the economy, but Wall Street at this point does not. I do think once rates fall materially lower, once we get 50, 100, 200 basis points of cuts from the Fed in the books, I do think real estate will start to pick up. I think people will start to, buy new homes, sell their homes, and that is going to be a great source of stimulus for our economy. Most people have most of their net worth in their homes, hundreds of thousands of dollars in equity in their homes, especially if you bought a home in 2021 or prior, right? Which a lot of people were homeowners at that time. And if you're able to sell your home, realize that gain and take that money to your bank account, you're going to spend more money. And I do think that is one of, if not the only upside surprise as far as a growth driver for this economy right now, or what could be a growth driver to this economy over the next 6 to 12 months, really 18 or 24 months from now. So for these reasons, markets are doing well today. A pushback on the recession fears, that's good. Also, Nvidia having good earnings, but falling, allowing that money to move elsewhere into other areas, that's also good. 10-year Treasury yields are actually rising today to 3.87%, up almost 4 basis points. Now, if I'm honest with you guys, I'm actually surprised that Tesla stock is only up 2.31% today, because I feel like with the soft landing like data we got today, and the fact that Nvidia is taking a little bit of a back burner, you probably could have seen a better day for Tesla. I do think there is some concerns, some fears out there still about the consumer, about maybe Tesla's auto division of their business, and that could be holding the stock back a little bit, at least in recent days. If we take a look at Tesla stock on a technical basis, we were up a lot more just, a few hours ago. You were up to $215.23 per share at one point. That was, better than where we are now at about $211 per share. 220 is still that big level to break to the upside, but you do want to find support and hold support at this 20-day moving average. In fact, we did today. That 20-day moving average is at $208.60 per share. And as long as Tesla stock holds up at these current prices or higher, this will trend upwards. And as long as we continue to find support at that 20-day moving average, Tesla stock should also move higher. Now, like you seen yesterday, this 200-day moving average will be important to the downside. That is at $203.19 per share. We briefly broke under that yesterday and then quickly bounced back above it. So it does look like there's a lot of demand coming in when Tesla stock is dropping below that 210 level. Even if you look at, prior days, the day before yesterday. So what was that? Friday? You had, or Monday, you I mean, found a lot of support around 210. Every other day for the week prior, you found a lot of support around 210 ever since we broke that on August 15th to the upside. So I do think 210 in and of itself is kind of an important level. But if we don't hold it, I mean, I wouldn't be surprised heading into September, because September is such a weak seasonal month for markets. As I've explained here on this channel a couple of times before, over the past 10 years, September is on average down about 2.6% for the S&P 500. No other month is negative besides December, and December over the past 10 years has an average return of negative 0.2%. So September is over 10 times worse than December, on average, the second worst month of the last 10 years. That's crazy, okay? Even over the past 4 years, the best September we had was negative 4.1%. The worst September we had was almost negative 10%. So from that perspective, we are running into some seasonal weakness here soon. And I'm sure, just going out on a limb, Tesla's probably not totally immune to that. If we take a look at option activity for Tesla stock today, these are interesting or unusual trades. You can see 26 of them totaling $7.86 million with a positive order value of 100%. So people feel pretty dang good about Tesla in the options market today. Now, those are big money trades. Those are hedge funds and institutions, not retail investors. Taking a look at the short interest, that has continued to fall, now down to 2.95%. So definitely seeing shorts that don't want to be as short in Tesla anymore. And that's also a good sign. You currently have $16.89 billion sold short in Tesla stock, totaling 82.07 million shares. So definitely seeing some shorts covering, and that's a good sign. It looks like today you have return shares 651,000, borrowed shares 370,000. That means on net, about 281,000 shares are being covered today. I mean, that's again in line with what we've seen. Shorts are continuing to cover on short positions. Google Trends data for the Cybertruck continues to fall, now down to 57. The Model Y and the Model 3 are holding up, relatively unchanged. The Model Y at 26, the Model 3 at 25, the Model S at 11, which is actually moving upwards in the last couple of weeks, and the Model X is at 8, which is moving down marginally over the last couple of weeks. So bottom line, still seeing very strong trends data from Google for Tesla. Now, China doesn't have Google. So I think that's why these Google Trends numbers are so critical to investors, and something that I think is underlooked a lot when people are thinking about Tesla or trying to, think about how demand is for Tesla. Google's going to give you a representation of Europe, of the US, but not China. But we don't get data out of the US like we do out of China for vehicle insurance registration. So we have a pretty good idea of what's going on in China, and we can use Google Trends to show us how potentially the US and Europe are doing. And if we're looking at trends data recently, it would suggest Tesla's doing just fine in the US and Europe. And we know Tesla's doing just fine in China, probably looking at a new record quarter for sales in Q3. CNN's Fear and Greed Index is jumping big time today into greed territory at 62. Yesterday, you were neutral at 51. So not a huge move on the markets necessarily, but a big move in the Fear and Greed Index. Market momentum is back into greed territory. Stock price strength is fear. Stock price breadth, extreme greed. That's good. We haven't seen that in a long time. Put and call options, greed. Market volatility, neutral. Safe haven demand, extreme greed. And junk bond demand, extreme fear. The percent of stocks trading above their 50-day moving average also doing well today, but not that well. Some small caps, are doing very well, but only 3.16% of stocks are breaking above their 50-day moving average today. You now have 65.4% of stocks trading above their 50-day moving average. So, this is a good day for sure, but it's not that good across the board. Like, there's a lot of room for strength here. If you are in the bull camp, if you do think September is going to be a good month, historically that would suggest otherwise, but if you do think September is going to be a good month, there is room for things to get much better from here, especially in the internals of our markets. Sentiment for Tesla today, surprisingly, is a little bit more bearish today than it was yesterday. Yesterday, you had a reading of 35, which was bearish, and today you have a reading of 34, which is bearish. So that's strange. Message volume is high at 58. Yesterday, it was normal at 51, and participation ratio today is high at 55. Global inventory numbers falling quite a bit for the Model S, down to about 3,200 vehicles in global inventory. Model X is up to 4,600 vehicles in global inventory. Model 3's at 6,100, and the Model Y is starting to fall a little bit, down to about 7,200. Let me know what you think about all of this information down below in the comments section. We do have another major event coming tomorrow. We do have more earnings as well, which I think may or may not be important. We will discuss more of that in the next video and what I think September has in store for markets. You definitely don't want to miss it. So again, let me know what you think about this information down below in the comment section. If you guys do want to come trade with us live in real time, check out that link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.